Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
G'day, welcome to the Australian Property Podcast. This is our weekly 2 cent segment. We're on a mission to become Australia's most trusted property podcast. And in the 2 cent segment, we take a plain English look at the big 3 property news stories of the week. I'm joined by none other than Chris Bates. Chris, how's your week been?
Mate, Pete, been very well, thanks. Just head down, bum up in this household. We're going on holidays in a couple of weeks to Fiji for a couple of weeks. So, all stay healthy. That's our goal for the next 2 weeks. And, start to look forward to our holiday.
Oh, can't beat bit of Southeast Asia or Fiji. I'm very jealous. I'm traveling to South Wales next week. Not quite so exotic. Not New South Wales, actually South Wales, to see my brother before I head back to Australia. So I've never been, so I'll be interested to see if it's anything actually like New South Wales or whether it's just an anomaly in terms of the name. So I'll keep you posted next week. What else has been going on? I've just been watching all these figures come out last few days. US inflation down below 3%, producer prices dead flat over the year. It's pretty amazing change. A year ago, those prices were up in double digits for producer prices. And then I've seen China's inflation is 0 and producer prices there are falling or heading into deflation. So it's all pretty interesting stuff. And finally, things actually moving in the right direction. We've had so much bad news on inflation. It's nice to see something improving.
Yeah, it's interesting you say that, Pete. I mean, because I do feel like there's a bit of domination by, still there's this sticky inflation. Rates are going to go higher than we expect, etc. I mean, on the other side of the scale, what are you seeing in terms of the inflation figures that aren't great? I guess, when you look globally, right, the US, maybe they've got the genie back in the bottle. Maybe that's not an issue in China. But what are we sort of got to be worried around inflation? Is there still some lagging signs?
Oh, UK is struggling. Their inflation rate went to basically 10%. And I think the difference in some other countries, UK's wages figures were out this week, 7.3%. So inflation went high, but then all the people have started demanding higher wage rises. Public sector, you've got people like nurses and government workers and people saying, well, if inflation is 10%, we need a pay rise of 10%. And this is, I guess, how inflation becomes so embedded in the economy. I think the thing to watch out for in the US, it looks like goods prices are actually falling now, but it's those sticky services prices that we've got to watch out for. It may well prove to be the same in Australia. I think goods prices, as the economy starts slowing and spending starts slowing, you might see those start to fall. But things like insurance premiums. I've seen things in the property market, strata fees, something jumping higher to account for higher insurance premiums and things like that. So I guess, similar dynamics, but we're a bit further behind on that journey because international borders were closed until February 2022. So it took us a while to get going on that journey, I guess.
Yeah, I mean, I think NAB announced in the AFR that there was, quite significant pay rises that the union sort of negotiated over the next 4 years, 5%. I think it was total of 17% over 4 years, plus the ongoing battle, right, which we've spoken about a number of times on this podcast around, do you work from home? Have you got the legal right to work from home? That's really CBA, getting taken to court there. So I think, are we going to see a bit of wage price inflation here, especially if it is in the services sector and then we have to keep our prices high? Like, do you think we've still got a big problem here? And do you believe that rates have still got a lot to go higher, or where do you think we are on that journey right now?
Yeah, well, market pricing over this week has really calmed down quite a bit. I think terminal rate now 4.4. So that kind of suggests maybe one and done. These obviously things can change. I think the thing, this is one of the news stories we'll talk about this week. I think with high population growth, that will probably keep a lid on wages growth if you look at what's played out in countries like Canada, the unemployment rate starting to rise now, and that really will start to depress wages growth. And I think in Australia, we don't have sort of runaway wages growth that some other countries have seen. But until a lot of people are waiting to get a green light or a nod from the RBA that they're sort of finished. And so Governor Lowe actually did a speech this week and said monetary policy may have more work to do, but we're not sure. And as we speak, he's been replaced by Michelle Bullock as the new governor, so an insider appointment. So you'd think probably not too much change in terms of policy, but we're maybe not quite at the peak yet in terms of the rate cycle.
Yeah, so I think this is the market expectations been bouncing around. And I do think in the last 2 months, we've seen buyers get very nervous again. I think sellers are very nervous and people with mortgages are very nervous. We've absolutely seen that. They just want that certainty on how high a rate's going to go. And, when there was a real dovish sort of, talk that it was going to go closer to 5, I think that really scared people. And I think you're right around the jobs. We've definitely seen that, people aren't as gung-ho around, swapping jobs. And that's usually when you get your big wage increase. We've seen a bit of redundancy start to play out with our clients and have come to us as well. So, I think that also leads into, wage inflation when there's a real mobile job market and everyone's switching, and there's you can even see the big tech companies like Atlassian and Canva and, bring in sort of performance metrics, which they haven't done before. So I think everyone's bucking down for this potential recession, right? And that's not a market where you ask for more money. You really try to hope to keep your job. And I think switching jobs and then going on probation is quite risky when you got a big mortgage. And so, or starting businesses and things like that. So it really stifles innovation as well, which is a negative. So, it's going to be interesting to see. So what are our 3 stories, Pete? We're probably 10 minutes in already, but what's our 3 stories this week?
Too much yapping, yeah. Well, you're right. Monetary policy does work. I think that's the thing. We're seeing it all around the world. Things are slowing down. So there's always media articles saying, well, what if interest rate hikes don't work? But they are working. You can see in all those forward-looking indicators. Before we rip into the big 3 stories of the week, just one thing for your diary. The Rask Roadshow is coming up around September, October time. I'll be going to Newcastle, Port Macquarie, Wangaratta, Sydney. So catch me at any of those events. I'm sure, Chris, you're coming to a fair few as well. So thongs and Hawaiian shirts at the ready, and make sure you book your tickets.
Absolutely. I'm not exactly sure I'm going to. I'm definitely be the Brisbane one, maybe Gold Coast, maybe Newcastle, down in Melbourne as well. I'm not doing my Melbourne. Sydney one's going to be a big one, right? So, I look forward to meeting any of our listeners there as well. So what is our 3 stories, Pete?
Yeah, so if you're not familiar, every Sunday morning at 7 a.m, you'll get our 2 cents podcast episode. And we basically go through the big 3 property news stories of the week, but also anything you want us to cover. So do send us your questions. So this week's story number 1, an unseasonal surge in new property listings. So for so long now, we've been talking about low stock on the market. And then suddenly, just in the past week or two, listings started to pick up. Now, we've got some more granular data on that, so we can actually shed a bit more light on that story. Secondly, has the rental price boom peaked? SQM Research and CoreLogic both seem to think so, their latest figures. And then thirdly, a story that we kind of touched on already, the population growth superpowers around the world. So there's certain countries, Canada, Australia, UK, New Zealand, that are really pumping immigration, and in some cases at record highs. So we'll take a look at why that's happening and what it means, particularly for property. So, Chris, let's kick off with this unseasonal surge in property listings. So this is not traditionally a time of year when people sell properties. Listings have been declining, but just suddenly in the past week or two, suddenly a surge of listings. So what's happening?
Yeah, it's interesting, right? So I think there's always people looking to or being forced to sell, death, divorce, aged care, just people naturally moving because they've had to with job change and location, etc. And they just think now's a good time. So there's always some listings on the market. But I think in this time of year as well, it's not a time where you usually make property decisions, school holidays, winter. Usually they don't ramp up till later in the year. And I think we've seen this real lack of listings at the start of this year. And then I think there's just been this little explosion this month when you look at the really unseasonal, right? And it looks quite concerning when you look at the chart because you see this, it should be going down or it should be pretty flat and it's really jumped up. And I was like, well, that's not what I'm seeing for our clients. Our clients aren't saying, hey, there's so many more properties on the market. I'm constantly looking at, properties with clients and, personally just tracking lots of different markets. It's not like I'm seeing this explosion of great properties on the market. And it's funny, Chris Joy, who's still predicting this, 15, 25% price falls, back from, the highs of 2021. He made a quote saying, Alexander Phillips, the number one agent in the country, particularly in the eastern suburbs of Sydney, called him up and said that there's going to be this explosion of people looking to sell. And I was just like, that just doesn't make sense. And so I did a post on LinkedIn yesterday just saying, I don't know if that's true across the country. I reckon it's only going to be in certain pockets. And I'd say personally where investors are selling, because we're absolutely seeing with our clients, investors, especially ones who have got multiple properties, really be under the pump. And people who have bought multiple properties prior to coming to us, I just want to make that clear. We don't recommend a quantity strategy at all and never have. It's more a fewer number of quality assets. But we get clients coming to us all the time with 3, 4, 5, 6, 7, 8, 10 properties. And they're the ones who are really struggling. And so, yeah, that's sort of the figures. What was your sort of take when you saw it, Pete, when you initially saw it, CoreLogic, and the AFR did an article on it as well?
Yeah, so this was the data point that caught my eye. So Tim Lawless, fellow Noosa dweller, of course, from CoreLogic, good guy, Tim, basically shows the number of new listings added to the combined capital cities is up 9.9% relative to a month ago. So that's a really counter-seasonal trend that you wouldn't normally expect to see. Now, I did make the point that the stock of total listings, i.e. all of the properties on the market, is actually way below average still across most of the capital cities and regional Australia, about nearly 30% below the 5-year average. So I think some perspective there. Yes, new listings have suddenly jumped, but the total number of listings on the market actually isn't that high. And yeah, we're certainly seeing this. We're buying actively for some clients in Brisbane. I think it's actually really hard to find good quality properties. And when you do, there's other buyers agents there and loads of competition. So a bit more stock is welcome. Whether this trend carries on over the next few months and then into the spring selling season, well, that would be really interesting to watch. Now, Chris, you did a bit of digging here. You spoke to Kent Lardner from Suburb Trends, a good friend of the show. Kent, how you doing? Now, Kent sent through some more granular figures to help us understand who is selling, where in the country are they selling, and where are the stock shortages. There's really interesting insights here from the guys at Suburb Trends. So, Chris, my reading of that is in the eastern suburbs of Sydney, northern beaches, inner west, city and inner south, the stock levels are just chronically low. But the real surge is really come from Western Australia, which makes sense because the market's been very strong, South Australia, but also, interestingly, places like Logan, Ipswich, Cairns, Mackay, Toowoomba, which I think ties back to your point. This is investors selling cash flow investment properties that maybe were once strong cash flow investments once upon a time, but suddenly with a cash rate target at 4%, they're not, and people are offloading them. Is that how you read it too?
Absolutely. Kent obviously saw my point on the LinkedIn and just quickly picked it up and sent me, some numbers, right? And you can see it's a 300% increase in listings in the Western Australian outback, in the wheat belt out there, South Australia outback, the Barossa Valley, the Darling Downs, which I think is in Queensland in the outback, South Australia, Southeast, Central Queensland, Queensland outback. And then you're right, this is a bit of a concerning one, I think, is the Ipswich, because it already had quite a lot of listings, and then it's like gone from 280 to 650. And that is absolutely
that's a big increase.
Yeah, I think that's a lot of we've seen this where what we call property people, it's a nice name for property spruiker. Basically, they encourage investors to buy in these locations outside of Brisbane. It's a good 45-hour drive, right? Isn't that, Pete? To Ipswich from Brisbane?
Yeah, I think when I've lived in Brisbane for a number of years, and I remember whenever I used to go up to Mount Cootha, and you look across to Ipswich in the shimmering heat, and you think, gee whiz, it must be hot out there. I mean, it's hot enough in the city, but if you're going further inland, it's a nice little city, Ipswich. But I mean, there is less scarcity in the stock. There's more land release. There's more new builds.
Yeah.
And I think actually we've just seen in recent years there was a big proliferation of investors going in to that market, and it looks like they're now coming back out again. And actually, again, more CoreLogic figures there. They've sort of run some numbers to show who is selling by cohort. And yes, we don't know for 100% sure whether something's an investment property or owner occupied, but based on their sort of analysis of the data, well, it is a big surge in investor listings. So normally, about 25% of the stock on the market is investors selling. Well, now it's above 30%. And in some cities, it's actually quite a long way higher than that, if you look in some parts of the country. So it does seem to be, exactly as you said, probably portfolio investors with 2 or 3 properties struggling under the weight of interest rate increases. And I think this is being reflected actually in some of the stock that's coming on the market. It's not that good. I think if people are selling their least preferred property or their worst performer. And so some of the stuff that's coming up for sale actually isn't that appealing, particularly for a home buyer.
Yeah, absolutely. And I think, going through this list, it's like, Logan was on there, massive increase. Bit in Adelaide, to be honest, but a lot of investors have gone to Adelaide in recent years because that's what's been driving up a lot because of the affordability factor. Not to say we would encourage that. Bit in Perth, Cairns, Toowoomba, Moreton Bay region in Brisbane as well. Interesting in Sydney, it's like there's not really many areas. The Sutherland Shire's had a bit of a jump. So that's maybe people going, well, actually, I need to get out. I want to retire. I think we did see this at the height of the boom that a lot of people were potentially getting out of the northern beaches a bit because they're like, well, that money, never expected my house to be worth this much. And I think in the Sutherland Shire, it's a similar thing where, they know they can sell a house that, for a big gain. And then that's an opportunity because the Sydney market's been running a little bit. Maybe this is my opportunity to bank a bit of cash, to put into my super and to retire. And maybe I've moved further south. Illawarra region's a similar story. There's quite a decent, that's sort of the Wollongong area. Newcastle got a 20% increase in listings as well. And the Hawkesbury sort of Balcombe Hills region in Sydney was up 20% plus Blacktown. So, these are the outskirts of sort of, the outer ring of, say, Sydney. And so, or the middle to outer ring. So I think it's definitely something for us to watch, right? If this continues on for many months, the thing that determines prices is if you're desperate as a buyer and you're competing over a small number of properties, then that's more likely to start pushing prices up because, you don't want to miss out too many times. But when you've got choice and you know that you're the only buyer on it, you sit back. You just go, there's no pressure for me to buy. There's no urgency. I've got lots of choice. I'm not going to go rush to my decision. Then you start seeing some cheaper prices, and why would I buy now when prices are falling? And then so more stock that's the key ingredient to flip the market. And it looks in these areas that, if you owned an investment property in here and you listed last month, you'd be like, yeah, there's nothing on the market. But actually now that you've listed because everyone else is listing, because it takes a couple of months to sell, right? You have to, potentially leave it, get a tenant out, get it ready, pick an agent. So when that negative news story changed in May, I reckon people said, quickly, let's get it on the market. And then in June, by the time they all got it on the market, they've realized everyone else is getting it on the market. So, I think this is a story we need to keep watching over the next few months.
Yeah, it's interesting to see that Gold Coast over a 4-week period, 24% increase in listing, Sunshine Coast as well, bit of a smaller increase. But actually, if you look at all the regions of the 7 sort of tightest markets, if you like, we've got Sydney City and in the south minus 29%, Northern Beaches minus 33%, Inner West minus 42%, Sydney Eastern Suburbs, of all the regions in the entire country, minus 47%. So listings have basically collapsed. So yes, it's not the same story all around the country, and actually a big chunk of this has really been driven by Western Australia, South Australia, and a whole load of those regional Queensland cities around Southeast Queensland, Far North Queensland. So yes, there is an increase in listings, but it's not everywhere, and it's largely driven by investors by the looks of it.
Absolutely. And I think let's just keep watching this. We'll report back to you on this 2 cents. So what's I guess this leads into the second story, Pete. What do we got for today?
Yeah, so has the rental price boom peaked? So I think if you look at Core Logic, they showed the rental price growth was 0.7% in June. So rents are still going up. But actually, if you look at the year-on-year figure, past the peak now, and SQM research also showed an increase in the vacancy rate nationally from 1.2% to 1.3%. Now, again, there's a granularity thing here. Particularly Hobart, really big increase in vacancies. Canberra is now above 2% rental vacancy rate and rising. So those markets are clearly easing. I think just as a general point, Chris, where you get inflation either in the rental market or just the economy in general is where you get demand changes more quickly than supply can respond. Then you see this big spike. And that's exactly what we saw. The economy reopened, the borders reopened February 2022, massive surge in rental demand through COVID as well. But the supply just couldn't respond quickly enough. And certainly in places like Sunshine Coast, Gold Coast, a massive spike in rents. But I think eventually everything gets priced in. The market sorts itself out. And I think it doesn't mean we've seen the end of the rental crisis. And we've got projected population growth over the next 5 years, which is massive. So, with not as many investors in the market, I don't think it's over, but I think probably the peak of the rental price growth is actually past. And that, I suppose, in one sense, is really good news for the Reserve Bank because they actually need inflation to start coming back down.
Yeah, I think we'd be more worried if vacancies were going up and more investors were entering the market and, you're going to create this. That wouldn't be a bad thing for renters, to be honest. You'd actually just see a declining in rents, which would be better for renters, but not great for investors. But I think in this market where we lead this into our first point where investors are bailing, well, that means that those are most likely going to get sold to owner-occupiers, or even if they take 3 to 6 months to sell, which is what I would worry about in these. A lot of people don't sell their properties with tenants in them, right? But maybe they are in these scenarios. They're still not styling it and getting the tenants out. But I would say that, yeah, ultimately we've still got very strong population growth and we've got investors bailing, and they're most likely going to sell those property to home buyers. We're just not seeing many new investors because they haven't got the borrowing capacities to do so, or they're thinking about doing a home upgrade first, or they haven't got enough capacity to buy. They're worried about their mortgage on their home. So not that many new investors in the market. If anything, there's more investors leaving because there's 3 million investors' properties, right? And only a certain number of properties people buy every year. So, if that number of buyers drops, the sentiment to that, doesn't change the number too much, right? How many investors enter. But if the 3 million property investors make a decision to, sell, and very quickly you can get more investors selling than investors buying. I think that's what's happening now. And I think the rental crisis isn't going to go away anytime soon because the thing that would make that go away is lots more investors and less renters. And I think that's not going to be the case.
If you look around the country, Hobart easing, Canberra's easing, Gold Coast, certainly on the Sunshine Coast, if you went back to the peak of the frenzy, there was stuff renting for $3,000 a week, $2,500 a week.
Yeah.
Now, anything in those higher price brackets is just sitting there. There's nobody's taking it now because the balance of power has shifted and a lot of people are moving back to the cities as well. People can holiday overseas again. So many Aussies seem to be in Venice or Florence or, the Ashes cricket. So people aren't being forced to holiday at home anymore either. So I think there's those parts of the market are all easing. I think where rental markets are still tight, well, Brisbane is still tight, 1% vacancy rate. Adelaide is 0.6, so that's very tight. Darwin still under 1%. I think an interesting one to watch will be Melbourne. I think Melbourne saw a lot of people leave when the economy reopened. A lot of people ended up in southeast Queensland. But if that's starting to reverse, plus the Victorian government has proposed a new land tax change, which changes the whole scope of land tax for landlords. So broadens the catchment, I guess, and also an increase in the rate. That could easily flow through to some issues. Melbourne, the rental market, yes, the vacancy rate ticked up a little bit. in June. But the demand for housing in Melbourne is going to be enormous over the next 5 years. So that one's kind of a watch this space, because I don't think that one's over yet.
Yeah, Melbourne's an interesting one. So we're not getting to see many investors look at Melbourne purely because the cash flow right now is really negative. It's always had lower yields down in Melbourne. So, especially when you're looking at the housing market. So investors have said, oh, look, I'm still betting on Melbourne from a capital growth point of view because I love the city and I believe that the city's going to keep growing and I know they're going to be good investments. But the trade-off has always been a little bit lower rent down there, and a lower yield. And that's really hard to justify right now when interest rates are so high. It's a really big, and so I think people, and already it's a decent price to enter in the quality parts of Melbourne in terms of what you need to spend. And so a lot of people are saying, well, I'll go for a little bit less debt. I'll look at Brisbane as an option because it's a bit higher rents up there and I can justify the cash flow a little bit. So I think that's going to, and especially when you've got issues with the land tax popping up as well. I think there's not going to be many investors investing in the Melbourne market. If anything, more people leaving, which is actually probably going to create further, low vacancies and potentially some rent increases down there, I would say.
Why are the rental yields lower in Melbourne, Chris, than say in Sydney? Is it because supply is a bit more amenable down there? It's a bit easier to build. Certainly, if you look at markets like Footscray or Docklands or some of those inner suburban hubs, there's been a lot of apartments built over, I guess, since 2015 or so. So I guess that would be part of it. But if you look at houses in particular, the rental yields they're the lowest in the country very often. Is that just a supply story?
I reckon it is a supply story. I think there's a lot of choice to rent houses. I think, and I think there's a lot of choice to rent apartments down there. I think that's the difference in Melbourne. They've been building a lot over the last 5-10 years, and Sydney haven't, in comparison to the population and things like that. And maybe people are willing to travel a little bit more. Maybe the public transport, people are willing to not be right in the action as much as they want to be in Sydney, for example, and competing over a small number of locations that have been underbuilt. I would say it's really a supply thing that, at the end of the day, the population's still been growing down there. And I just don't think people are going, well, why would I spend, $2,000 or $1,500 renting this house out when I got all these other choices?
Even the Airbnbs are really, really good now. I stay sometimes down at the South Bank in Melbourne. You can pick up almost a brand new sort of Airbnb unit in one of the big tower blocks and very reasonable, practically brand new equipment and everything just kitted out perfectly, and you're just a stone's throw away from all the action. So, and don't forget, actually, I will be in Melbourne for the Rask Roadshow and the Wangaratta Roadshow. So get your tickets for those because we'll be there with bells on, getting involved for that. So, Chris, final news story of the week. There's an old adage in real estate which said something like, find out whether people are moving and buy the land before they get there. I mean, this is a centuries-old saying, but looking around the world, there's certain countries that are just going hell for leather on immigration and population growth. Some countries, like Germany, have had some social issues related to it. I saw a figure this week. So population growth from Statistique Canada, if my French is up to scratch. Population growth in Canada over the year, 1.2 million or just above. Now, this is just an extraordinary stat to me. If you went back a decade ago, population growth in Canada was running at about 300 to 350,000, maybe a bit higher on a couple of occasions. But suddenly it's like 3 or 4 times as big. Now, yes, of course, we did have the period during COVID where there was no immigration or very low population growth in a lot of these countries, but they've suddenly snapped back to population growth, the likes of which has never been seen before. I saw a stat from CBA out this week. Australia's adult population, or 15 plus population, 2.75% growth over the past year, way outstripping the growth in the dwelling stock. Now, in Canada, jobs growth is, I say only, in inverted commas, has only been 470,000 over the past year. So the unemployment rate there has risen to 5.4%. So I guess that's what's coming for Australia in due course. But I suppose the bigger picture question here, Chris, is why are countries like Canada, New Zealand, Australia, United Kingdom just going so hard on population growth, and is it sustainable?
Yeah, I think Canada's what, circa 40 mil or something, right? So, I was saying like 2.5% increase in sort of
Wild. It's absolutely
yeah.
wild.
I mean, what are we having here? 500-600 is a huge number for us, but it was usually more around sort of that 300-400 is, the natural population growth plus the, migration, etc. So it's just a huge, huge number. And I mean, I guess if the people come there, then they're looking for jobs, right? Very quickly. So, I think you're expecting sort of similar things to happen here, Pete, where, this will, I guess, increase our unemployment rate, reduce the wage price increases, and then potentially, take a lot of steam out of the economy from, the wage increase. But ultimately, they bring a lot of money with them potentially, and they also spend a lot of money in our economy. And so it's a catch-22, right? When you've got high migration, it's great for overall spending and growing the GDP, but maybe it's going to also create some more inflation issues.
You took the words out of my mouth. I think, yes, wages growth will be killed stone dead by that kind of population growth, but it does create inflationary pressures on things like rents. It creates pressure on infrastructure, the housing stock. I think the interesting question is as to why. Now, I'm open to suggestions here as to why we're going down this route in so many of these, particularly those countries that I mentioned. I think my reading of it is we've got productivity issues, there's anemic growth, got aging populations, and it's just an easy way to import growth. And also it slows the aging of the population. Now, if you look at countries like Japan and China and South Korea, they're going to face dramatic population declines over this century, possibly maybe a halving of the population over the course of the next century. And my reading of it, and I'm open to other suggestions if anyone has a different reading on it, but I think a lot of these countries like Canada, New Zealand, Australia, UK, they've seen this coming. Fertility rates are now lower. We're not really replacing the population. I think back to my parents had 5 kids. Nobody's doing that these days. 2 is plenty. And a lot of people have none or one. And I think they've just seen this demographic train coming down the track, and they're getting on the front foot now and importing very, very high population growth. And Australia is right at the forefront of this. As you mentioned, I think if you project out the current numbers, well, they're way over 600,000, probably 650, 680. I mean, I don't know how long we can sustain that. But as you said, it's a double-edged sword. It's will kill wages growth, but it could potentially reignite some inflation issues in other parts of the economy as well.
Yeah, and I guess your sort of point here is, buying where people are moving. I guess that's as Australia's story, and also a capital city. I think that's where people move to when they do move here, and because of jobs and people they may know or their communities, etc. So I think if you're thinking about buying property where people are moving, well, Australia is a great bet for that, right? It's not like we are in China or Japan or where we've got this aging population, and I think you can buy a house for 1 yen in some parts of these old old Japanese bathhouses, I believe. That's people are giving them away because the maintenance is so big to upkeep them, right? So these aren't the issues we've got in Australia, and I think if you're betting on property longer term, I think we're in a very strong country for that, because people do want to move here, and they also do want to move here if they've got a lot of money, right? Because we've also looked at the millionaire index on in past episodes, and I think we had the highest number in the world of millionaires, not as a percentage, the actual number. So, I think it's good news for the longer term, but there's going to be challenges at the social level, at the infrastructure level, at inflation, at integrating, with jobs and, on top of other issues like, automation and things like that. So, ultimately for Australia, I think it's, great news for pushing up property prices if that's ultimately what we're targeting our conversation towards.
Yeah, new migrants, it's like in Britain, everyone knows London, and that's where most of the other new migrants are, so people tend to flock to the same places. New migrants to Australia go to Sydney and Greater Melbourne in that order, and then South East Queensland subsequently when they move internally, because Sydney's the city, I was a new migrant myself back in the 1990s. My friends were in Sydney. I knew Sydney. I was never going to migrate to, somewhere in the Northern Territory because I just, didn't know anything about it. And I guess the thing is that most new arrivals are renters initially. And that's why I think this rental crisis story, yes, we might be through the peak of the frenzy, but it's an ongoing issue. And it's probably going to be for the next 2 or 3 years because of the sheer weight of demand from new arrivals. And most people who step off the plane are renters, at least for the first year or two. So Sydney and Melbourne, there's some ongoing challenges there in the rental market. On the inflation point, looks like the budget might come 20 billion in surplus. So there might be some more cost of living relief in the budget in the post. So hopefully that can help to mechanically reduce inflation back down towards the 2 to 3% target. So yeah, lots happening, Chris. So I guess those are the big three news stories of the week. I think in particular, it's just interesting to see the granularity. Yes, new property listings are coming onto the market, but they're not in Sydney's blue chip suburbs. It's really driven by Perth, Adelaide, and regional southeast Queensland and parts of North Queensland. So different speeds, multi-speed market as usual, and plenty of other stuff to keep us interested over the week ahead, I guess.
Yeah, and I think it's going to be one we're going to track in a lot of detail. I think it'll also be good to talk next week around any changes in this work from home sort of hybrid negotiation. I think there's lots happening in that space. But I think also you got to think through is if people do start to list, I do think price growth may start to slow down because I think that buyers are really struggling in terms of what they can borrow. Just borrowing capacity is getting even tighter. Another 5% down with the last 2 rate increases. So if there's another 1 or 2, there's just going to be this natural slowdown because the access to credit and how much money you can get access to definitely does interlink with price growth. And so, and then the appetite towards debt is definitely decreased because people are like, well, I've got to pay, 5.5%, 6% now. I'm not going to take that on that type of property. I'm not going to take that bet. I'd rather just keep renting. I'm going to be more patient. Buyers are going to get more picky. And so, but I also think people are going to sit on their hands and not sell their good properties. And I think even if there was some people who decided to take advantage of the low stock in the market and sell, as soon as they believe that they can't sell for a great price, then their listings are going to slow down again. So we may see this seasonal bump up in listings in spring, even in the quality markets. But if that then meant that prices started to correct, then I think you're going to see a dry up of listings again. So let's track this one, Pete. And happy Sunday to all our listeners. And if you've got any questions or stories you want us to cover, please send them through. You got any things to wrap it up today, Pete?
Yeah, well, you can catch me on my daily blog, Pete Wargent Blogspot, or at Pete Wargent on Twitter. But yes, definitely subscribe for the Rask podcast on your favorite podcast player. And of course on YouTube these days. But do check out the Rask Roadshow. So drop us a line or you can just Google it. Get tickets for your local event because coming all around the country, Perth, Adelaide, Melbourne, Sydney, Brisbane, and some of the regions as well. Port Macquarie and Newcastle will definitely be there. So definitely come along to one of those. We love meeting people face to face and it's always good fun as well. And as Chris said, send us your property questions. And Batesy, if people want to get in contact with you, where can they go at Blusk?
Yeah, we've had hundreds actually now reach out via the link in the show notes. That basically it's a little type form. Fill that in. We'll chat to one of the team members and we'll figure out what's possible for you. So yeah, absolutely, would love to help.
Happy Sunday, and we'll see you next week. Cheers.
Cheers. Thanks so much.